10 reasons why Q4 could spark a monumental Bitcoin market shift. The crypto market is about to catch a lot of investors off guard. Don't let that be you. Look, I get it. It's been a brutal year for crypto. Between the collapses of major companies, the endless negative headlines, and the feeling that we're constantly nearing the bottom, it's easy to feel defeated. But here's the thing. This is exactly how bear markets work. They shake out the weak hands, creating incredible opportunities for those who are prepared. With Q4 right around the corner, there are some critical factors you need to know. Here are 10 reasons why Q4 could spark a monumental market shift. Now, you might be thinking, Graham, what does the stock market have to do with Bitcoin? And you'd be right to ask. But hear me out, because the two are more closely intertwined than you might think. Historically, Q4 is the strongest period for equities. Since 1945, the S&P 500 has gained an average of 3.8% during this quarter. That's huge. And get this, it's gone up a whopping 77% of the time. That's like hitting the jackpot almost every single year. Why does this matter for Bitcoin? Because as much as we crypto diehards hate to admit it, Bitcoin often trades like a risk-on asset, much like tech stocks. When the market is feeling bullish and money is flowing, both tend to benefit. So a strong Q4 for the stock market could very well set the stage for a Bitcoin rally. But let's dive deeper into the numbers, specifically for Bitcoin. During Q4, Bitcoin averages an incredible return of 88.84%. Let me repeat that, almost a 90% average return. And if we look at the last two halving years, which are years like this one where the rate of new Bitcoin being created is cut in half, the numbers are even more compelling. In 2016, Bitcoin rose by 58.17% during Q4. And in 2020, it absolutely exploded, surging by a mind-blowing 168.02% during the same period. Now, I'm not saying history always repeats itself, but it certainly rhymes. And right now, the historical data is screaming that Q4 could be a game changer for Bitcoin, especially because historically Q3 has been Bitcoin's worst performing quarter. And guess what we just went through? Yep, a pretty rough Q3. But remember, the darkest hour is always before the dawn. But let's zoom out even further than months or quarters. Let's look at the bigger picture. Historically, the period from October to April has been crypto's boom period. We're talking about the time when Bitcoin and the entire crypto market tend to go absolutely parabolic. If you look at the historical returns, the numbers are staggering. From May to September, Bitcoin has seen an average return of 619.5%. That's amazing, right? But hold on to your hats, because from October to April, the average return skyrockets to an astronomical 13,656,203%. You heard that right, over 13 million %. Now I know what you're thinking, Graham, those numbers are insane. What's the catch? And you're right to be skeptical. Past performance is not indicative of future results. But what this tells me is that there's a clear pattern here. May to September tends to be the accumulation season where smart money quietly loads up on their Bitcoin. And then from October to April, the bull market takes over, sending prices to the moon. And guess what? We're right on the cusp of that October to April window. Now, let's talk about something that's been weighing heavily on everyone's minds, the upcoming US federal election. We're less than 2 months away, and the outcome could have a significant impact on the crypto market. I'll be straight with you. I do believe a Trump presidency is much better for crypto. He's been vocal about his support for Bitcoin in the past, and his policies tend to be more favorable towards innovation and deregulation. However, I don't think a Kamala Harris win would be a death blow for crypto. It might limit upside in the short term and potentially lead to more regulatory hurdles down the road, but I don't see it as an existential threat. Remember, Bitcoin has survived this long because it's decentralized and resilient. No single government or politician can control it. Here's something else to consider. The market may not be fully pricing in a Trump presidency. According to prediction markets, the odds are roughly 50-50 right now. But if you look at the polls and the general sentiment, it seems like many people are still underestimating Trump's chances. Remember what happened in 2016? The polls were wrong then, and they could be wrong again. And if Trump does win, I think we could see a very positive reaction from the crypto market. Remember when he spoke at the BTC 2024 conference and glowingly endorsed Bitcoin and crypto? That sent shockwaves through the industry. Now imagine what would happen if he were back in the White House with the power to influence policy. It could be a game changer. Now, let's move on to something that's been dominating financial headlines for months: inflation and interest rates. The good news is that inflation seems to be cooling down. The recent CPI reading was the lowest since February of 2021, and that's a big deal. Jerome Powell, the head of the Federal Reserve, has been laser-focused on bringing inflation under control, and it looks like his aggressive rate hikes might finally be working. What does this mean for Bitcoin? Well, if inflation is truly on the decline, it could give the Fed room to pivot and start cutting interest rates. And that, my friends, would be like rocket fuel for risk-on assets like Bitcoin. Lower interest rates mean cheaper borrowing costs, which encourages businesses to invest and consumers to spend. It also makes risky assets like stocks and crypto more attractive compared to bonds. So keep a close eye on the Fed. A pivot could be coming sooner than many people think. Chapter 7: The dollar's decline. And here's another factor that could play into Bitcoin's favor: the weakening of the US dollar. A Federal Reserve rate cut would likely lead to a decline in the dollar index, which measures the value of the dollar against a basket of other major currencies. Why does this matter for Bitcoin? Because a weaker dollar tends to be bullish for commodities and other assets priced in dollars, including Bitcoin. When the dollar falls, it takes more dollars to buy the same amount of Bitcoin, which can drive up the price. So if the Fed does pivot and the dollar starts to weaken, it could provide another tailwind for the crypto market. Now let's talk about something that's incredibly important but often overlooked: global liquidity. Out of every single variable out there, Bitcoin is most closely correlated to global liquidity, more so than equities, gold, or any other asset class. Global liquidity refers to the total amount of money sloshing around in the global financial system. When liquidity is high, there's more money available for investments, which tends to push asset prices higher. And guess what? Global liquidity has already started increasing, and it's forecasted to continue rising into 2025. This is due to a number of factors, including ongoing quantitative easing programs by central banks around the world and the massive amount of fiscal stimulus that's been injected into the global economy. So, if history is any guide, the increasing global liquidity could provide a massive tailwind for Bitcoin in the coming months and years. Now let's talk about something a little less technical but just as important: market sentiment. Look at any retail metric you want: Google Trends, social media engagement, YouTube views, you name it. The trend is clear. 90% of retail investors have left the crypto market. They're gone. They've cashed out their Bitcoin, sold their altcoins, and sworn off crypto forever, or at least until the next bull market. But here's the thing: that's actually a good thing. Remember what I said earlier about bear markets shaking out the weak hands? That's exactly what's happened. The people who were only in it for the quick gains, the FOMO chasers, the buy high, sell low crowd, they're all gone. And that leaves more room for the rest of us, the ones who believe in the long-term potential of Bitcoin and the crypto market. If you're still here, if you're still watching this video, you're one of the few who stuck around. You're one of the believers, and that puts you in a very strong position. Finally, let's address the elephant in the room: FTX. The collapse of FTX and the subsequent selling pressure from Mt. Gox creditors and the German government have weighed heavily on the crypto market. But here's the thing: that selling pressure is temporary. It's like a bad storm that will eventually pass. And on the other side of that storm, we have something potentially very bullish: the FTX repayments. FTX is in the process of repaying $16 billion to its creditors. That's a massive injection of capital into the crypto market. And unlike the Mt. Gox and German selling, which was forced liquidation, the FTX repayments are going out to people who chose to hold their crypto. Many of these people are likely to turn around and reinvest that money back into the market. Think about it. They've been through hell and back with FTX. They've seen the volatility, the uncertainty, the fear, and yet they're still here. They still believe in crypto, and they now have billions of dollars to put back to work. That's a powerful force, and it could have a very positive impact on the market. So there you have it, 10 reasons why Q4 could spark a monumental Bitcoin market shift. Now, I'm not saying any of this is guaranteed. Predicting the future is impossible, especially in the crypto market. But the stars are aligning for a potential rally. The historical data is compelling. The the macroeconomic backdrop is improving, and sentiment is shifting. If you've been waiting for a sign to get back into crypto, this could be it. But remember, always do your own research, invest responsibly, and never invest more than you can afford to lose. Subscribe and follow for more Bitcoin updates. Let me know in the comments what you think about these 10 reasons. Are you bullish on Bitcoin for Q4? Let's discuss.